Okay, we wanted to do a little squawk picking this morning. Chris Verrone is here. He's the head of technical analysis and a partner at Strategas Research, and one of his picks is Morgan Stanley. I want to start with that because maybe you can juxtapose Morgan with how you think about Goldman Sachs. We were just having that conversation with Guy, who said that Morgan Stanley is a little bit more like the old Goldman, and Goldman's a little bit more like the sort of post-crisis-ish Morgan for a moment.
It certainly trades that way. And let's keep in mind, both these names, Goldman, Morgan, they had 40% declines last year. These were devastating bear markets. We think they're bottoming. Morgan Stanley back above its 200-day moving average for the first time in a year. Maybe this is a sign that the yield curve actually steepens here. Maybe this is a sign that rates actually go up. I think that is the message coming from some of these banks here.
And you like Morgan.
I do.
But Goldman on your list, or is that just...
Absolutely. I think this whole space, the banking, the brokerage space, I mean, even J.P. Morgan,
so it's
even
a broad
Bank of
call
America,
for you.
It's a broad call for us. We think rates are starting to bottom here. We think, frankly, signs of cyclicality are emerging everywhere. Banks benefit from that.
But if it's Morgan or the others, meaning if it's an either-or situation, you take Morgan because?
I do. I think it's emerging as the leader here. It's outperformed Goldman. It's turned after this 40% drawdown. It's starting to exhibit some leadership. That's the type of stock that we want to own here.
Okay, let's talk about another one on your list, which is Disney.
Sure.
Obviously, a big stock in the news that's already moved.
Yeah.
I mean, it has moved about as much as you could possibly imagine, but you think it's got more to run.
Yeah, I disagree that it's moved that much here. It's done nothing for 5 years.
Right.
Sure, but $20 billion in a week is not bad.
Yeah, up big after 5 weeks of nothing. We think this is just getting started. It has the benefit of a very good sector behind it. That whole media consumer group is getting better. Another name, it hasn't paid people for half of a decade. Starting to outperform Netflix here, too, which is important. It's outperforming its own consumer peers, so signs of leadership coming from a very big, important stock. We like it here long.
So, but just explain how you think this thing is going to trade, because I'm assuming there's a honeymoon period here as everybody awaits this actual product, right, Disney Plus, and is it a buy on the news, sell on, I mean, you see, there's going to be a moment here.
This is a name that was improving long before any of us knew about Disney Plus. This is a stock that's been getting better all year.
Okay.
It's been between 70 and 120 for the better part of the last 5 years. It's through 120 now. We think 175, maybe 200 over the next couple of years is where this goes. This is a major base breakout. As technicians, these are the charts we just dream of.
Okay.
So he's on the charts, but from a fundamental point of view, when you see a breakout like this in Disney, Guy, and this is on not a raised outlook, not hard numbers, but the expectation that Disney Plus will have this many subscribers at this price point.
And your point from a few
that?
weeks ago, you know, from a couple of years of just trading sideways within a certain band, as Chris just pointed out. How do you trade it? Great. Well, now Disney's trading at close to 22 times forward earnings, right? I mean, that's a staggering number for the space. Then it's a staggering number for Disney. Well, it probably trades at twice the multiple of some of its peers. Maybe they deserve it. I don't know. To Chris's point, to your point, through 120 was a huge breakout. But they report earnings, I believe, on May 8th. They better crush numbers on May 8th. Otherwise, I think it just sort of back and fills to the levels we just saw. Now, yes, it had been trading along this range and finally broke out. A lot of people now piling into the name. But you have to look at valuation at a certain point. And what did they really change other than that announcement? That would be my pushback.